Saudi Aramco, the state-owned oil giant of Saudi Arabia, has long been recognized as the most profitable company in the world. Between 2016 and 2022, Aramco generated over $700 billion in profits, dwarfing the earnings of its competitors. The company set a record in 2022, reeling in $159 billion in profits, marking the highest annual profit ever reported by any company in history. However, despite these staggering figures, Aramco is now facing significant challenges that threaten its future profitability and stability. This analysis delves into Aramco's storied past, the factors contributing to its current crisis, and the potential future of the company in a rapidly changing global landscape. Origin story. Saudi Aramco's history is deeply intertwined with the formation and economic development of Saudi Arabia. The Kingdom of Saudi Arabia, as it is known today, was founded in 1932 by Ibn Saud, who became the father of the nation and the progenitor of the current royal family, including King Salman and Crown Prince Mohammed bin Salman. The kingdom's early years were marked by financial instability, exacerbated by the global economic downturn of the Great Depression. This period saw a significant drop in the number of Muslim pilgrims visiting Mecca, which was then the main source of income for Saudi Arabia. In an effort to stabilize the kingdom's finances, Ibn Saud struck a deal in 1933 with Standard Oil of California, now known as Chevron. For a modest sum of $50,000, Chevron was granted a 60-year concession to explore, produce, refine, and market Saudi oil. This agreement proved to be one of the most lucrative deals in corporate history, as Saudi Arabia was found to possess vast oil reserves. By 1939, following the discovery of oil in Dammam, the state's budget had surged from $250,000 to $2 million. The subsequent discovery of massive oil fields in the late 1940s further boosted Saudi revenues, which increased exponentially from $7 million in 1947 to $110 million in 1951. Nationalization and growth. The 1950s brought increasing pressure on Saudi Arabia to nationalize its oil industry, a trend that was sweeping across the Middle East under the influence of Arab nationalism. This movement, spearheaded by Egypt's President Gamal Abdel Nasser, saw several countries seizing control of their oil industries from Western companies. However, the Saudi royal family, led by Ibn Saud, opted for a more measured approach. In 1950, Aramco, then the Arabian American Oil Company, agreed to a 50-50 profit-sharing arrangement with the Saudi government after being threatened with nationalization. Over the next few decades, the Saudi government gradually bought out Aramco, completing the nationalization process in a manner that maintained technical cooperation with its former American owners. This strategy ensured that the expertise and knowledge of the American managers were passed on to the Saudi workforce, a process that continued until 2010. This cautious and consensual approach to nationalization allowed Saudi Aramco to fully capitalize on the country's immense oil wealth, solidifying its position as the world's largest and most profitable oil company. Current challenges. While Saudi Aramco remains a dominant player in the global oil industry, it now faces several significant challenges that threaten its long-term profitability and stability. These challenges can be broadly categorized into three main areas: the global shift away from fossil fuels, the decline of OPEC's influence, and internal economic pressures within Saudi Arabia. Shift away from fossil fuels. One of the most pressing issues facing Saudi Aramco is the global shift towards renewable energy sources and the decreasing demand for fossil fuels. Although the world still relies heavily on oil, the demand growth has been sluggish since the COVID-19 pandemic. The International Energy Agency, IEA, projects that global oil demand will peak by 2029, after which it will begin to decline. This anticipated decline in demand is expected to put downward pressure on oil prices, reducing the profitability of oil-producing companies, including Aramco. As the global energy landscape shifts, Saudi Aramco will also face increasing production costs. The company's most accessible and cheapest oil fields are gradually depleting, forcing it to tap into more challenging and expensive reserves. This scenario will likely squeeze Aramco's profit margins long before the country's oil reserves are exhausted. Former Saudi oil minister Ahmed Zaki Yamani famously remarked that the Stone Age did not end because humanity ran out of stones, implying that the oil age might end well before the world runs out of oil due to the advent of alternative energy sources. Decline of OPEC's influence. Another major challenge for Saudi Aramco is the waning influence of the Organization of the Petroleum Exporting Countries, OPEC. Historically, OPEC, led by Saudi Arabia, wielded significant power over global oil prices due to its member countries' substantial share of global oil production. However, the rise of non-OPEC oil producers, particularly in the United States, Brazil, Canada, and Guyana, has diluted OPEC's market control. In recent years, Saudi Arabia has made concerted efforts to prop up oil prices by cutting its production. Despite these efforts, prices have struggled to exceed $80 per barrel, highlighting the diminishing power of OPEC in controlling global oil markets. The situation has been further complicated by the United States, which has begun trading oil from its Strategic Petroleum Reserve, SPR, counter-cyclically. By selling oil when prices are high and replenishing the reserve when prices are low, the U.S. has been able to stabilize global oil prices, undermining OPEC's efforts to manipulate the market. Internal economic pressures. Domestically, Saudi Aramco is grappling with the Saudi government's ambitious plans to diversify the country's economy away from oil dependency. Initiatives such as Vision 2030, spearheaded by Crown Prince Mohammed bin Salman, aim to transform Saudi Arabia into a more diversified and sustainable economy. However, these projects have encountered various challenges and have not yet yielded the expected results. To fund these diversification efforts, the Saudi government has increasingly relied on revenues from Saudi Aramco. This has involved selling shares of the company and reducing investment in oil production. In January, Aramco quietly abandoned a long-standing plan to increase its maximum production capacity from 12 to 13 million barrels per day, a clear indication of the financial strain on the company. If Saudi Arabia's broader economic challenges persist, the pressure on Aramco's finances will only intensify. Conclusion. Saudi Aramco, once the unassailable giant of the global oil industry, now faces a confluence of challenges that threaten its future profitability and stability. The global shift away from fossil fuels, the decline in OPEC's market influence, and internal economic pressures are all contributing to an uncertain future for the company. While Aramco is not on the brink of bankruptcy, its ability to maintain its position as the world's most profitable company is under serious threat. The coming years will be crucial in determining how Saudi Aramco navigates these challenges and whether it can adapt to a rapidly changing global energy landscape.